Hello, dear students. I am Sapan Parekh here. I'm a chartered accountant and cost accountant, and we have a privilege of teaching more than 5,000 students. We have three branches in Kandivali, two in Kandivali East and one in Kandivali West. And this is the second video for exclusively for students of NM and Mithibai, wherein I have solved paper of October 2016 accounts, and I'm sure this video will help you. The first video was for October 2015, and you will also shortly get a video of October 2017. These three videos will surely help you to prepare well for your accounts exam. So the first question is a multiple choice question. I'm not taking much time here because these are self-explanatory. And the second is true or false, which is also very simple to understand, and classification of accounts. So I think this is self-explanatory. If you have any doubts, please leave your comments in the comment section, and I'll be more than happy to solve it for you. So let me jump to question number two. So question number two is on journalizing. First is purchased goods of the list price 30,000 at 10% trade discount from Jaspal. So we have bought it on credit. So the entry would be purchase account debit to Jaspal, and 30,000 less 10% will be 27,000. Second entry is received 3,800 in cash from Yashwant in full and final settlement of his account of 4,000, which means Yashwant gave us a discount of 200 rupees. Cash is coming in, so cash will be debited. Discount allowed will also be debited, being a nominal account. And Yashwant is a personal account. He is the giver, so we will credit his account. So cash account debit, discount account debit, and Yashwant account. Then the next entry is goods costing 900 were destroyed by fire. So the journal entry is lost by fire account debit. Two, goods lost by fire. Lost by fire nominal account, debit all expense and losses. Goods lost by fire real account, credit what goes out. Next one. Sold goods to Mr. Gambhir on credit, rupees 12,000. So this is pretty simple. The entry would be Gambhir account debit to sales, 12,000 rupees. Cash sales at a list price of 7,000 and trade discount allowed 300. You know, trade discount is never recorded in the books of accounts, which means the entry will be passed with the net amount, which is 6,700, and the entry will be cash account debit to sales account, 6,700. The next one is paid 8,900 to Nitin in full and final settlement of rupees 9,000. So here we have received a discount of 100 rupees. So Nitin's account will be debited by 9,000, cash going out credited with 8,900, and we got a discount of 100 which will be credited discount received account. So the entry is Nitin debit to cash credit to discount received. The next one is interest on bank loan is 700, which was debited by bank to his current account, which means bank has deducted 700 from our account, which is a payment for us. So interest on bank loan account debit to bank account credit 700 rupees. The last entry in this question is Narendra paid to Rathod 18,000 after deducting 10% cash discount for prompt payment. Now, this is a very tricky question. Normally, students will calculate 10% or 18,000. But if you read it wisely, Narendra paid 18,000, which means Rathod received 18,000. I have prepared a working note for this. So 18,000 is a net amount, which is after deducting 10%. So we can't calculate 10% on 18. So here is the calculation. If the gross amount receivable is 100, then the cash discount will be 10 and the net amount will be 90. So 18,000 is equivalent to 90. So 100 is equivalent to how much? Which is 20,000. So amount receivable was 20,000 and cash discount allowed is 2,000. So the entry would be cash account debit 18, discount allowed account debit 2,000 to Narendra 20,000. And then don't forget to take the total of debit and credit, which should match. Let us quickly go to question number three. This is a terrific question, let me tell you. Very, very confusing question, and you need to be very clear about reading the question carefully. So let me do it for you. From the following transaction, prepare Mama's account in the books of Kaka. Now, if you don't read the question, then I'm sure your Kaka will make you Mama. So let me ask you a question. Prepare Mama's account in the books of Kaka. So in whose books we are going to write? Yes. So we are going to record transaction in the books of Kaka, Mama's account. So you have to think everything from Kaka's point of view. Kaka showed a debit balance of 1000 in books of Mama, which means in the books of Kaka, Mama will be a credit balance of 1000. So opening balance will be by balance brought down 1000 rupees. Remind you to think from Kaka's angle. Mama sold goods on credit, which means Kaka bought it. Kaka bought it from whom? Mama. So it is purchase account debit to Mama 2000 rupees. Then Kaka paid cash to Mama. So this is pretty clear because it's from Kaka's point of view. So Mama took cash 1500. Then Kaka returned goods to Mama 300. Again, this is very clear. It is purchase return. So Mama to purchase return 300. Mama received a check from Kaka 800 rupees and discount allowed 100. So which means Kaka paid him the money. So Kaka to bank 800 and discount received 100. Kaka paid 250 in full and final settlement of his account. So here you will have to prepare a working note. The total of the credit is 3000 minus the total of debits excluding these last two transactions is 1500 plus 500 2000 plus 800 2800 plus 100 2000. I'm sorry, I did the wrong calculation. 1500 plus 300 is 1800 plus 800 is 2600 plus 100 is 2700 less 3000, which means what we have to pay is 300, and we are settling by paying 250, which means we are getting a discount of 50. So the account will be Mama's account debit to cash 250 to discount received 50. So here the account gets tallied on the debit and the credit side, and there is no balance which needs to be carried forward. These are the first three questions of October 2016 paper. And don't forget to listen to the part 2 of the video where I have explained question number 4 and 5. I'm sure this is going to help you. Do like the video, subscribe and share it with your friends. Don't forget to listen to video part number 2 of October 2016 session. Thank you very much.